economists generally always agree that rent control is long-term pain. I don't believe there's any other industry like housing where so much of the narrative deeply and actively roots against the development of an industry.
Hi, and welcome to The Missing Middle. I'm Sabrina Maddeaux. Today, we're talking about Canada's rental market and why rents are actually falling in many cities, but finding a decent place still feels impossible. Before we get into it, don't forget to subscribe to our YouTube channel. So today I'm here with Max Steinman, CEO of RentSync, which owns Rentals.ca. Max's company connects landlords and tenants and puts out monthly rent reports that basically tell us how screwed we all are or aren't. Max, thanks so much for being here today.
Thanks for having me on.
So, the big story in the rental market right now is that rents have actually been declining a year in a lot of Canada's cities. Can you tell us why that's happening?
Yeah, for sure. Yeah, maybe we're a little less screwed now. I don't know if that's a way to
a little good news for once.
Yeah, I guess if I were to characterize the current situation, rents have been falling nationally. It's not the same in every city, right? Like we put out this rent report on a monthly basis, and the headline is always nationally, but you really have to look down to each market to see what's going on. But generally speaking, they are falling across the country. And we have seen this major shift in the last 18 months or so in supply and demand. That's ultimately leading to this result. So we went from this period of severe undersupply and very intense demand sort of through COVID and up until arguably about 12 months ago. And some markets saw during that period 20 to 30% increases in rents in what is a very sort of short timeline. And now we're in a market that demand has fallen off significantly due to, sort of a decrease there's just more stagnancy in the market. Younger people are not moving out at as much of a clip as before, just due to affordability. And then there's been a storyline around obviously international students and international study permits dropping. So that's all happening at the exact same time that a record amount of inventory of new condos, as well as new purpose-built rental is sort of coming to market. Those units are hitting in the last couple of quarters and the next couple of quarters. So it's sort of created this perfect storm that's enabled rents to fall from their peak. And in some markets, we've seen the pullback be as much as sort of 15 to 20% from the peak in markets like Toronto and Vancouver, which were the most expensive markets in the country.
Could you dive a bit deeper on how this rental market is different from 2 years ago or even pre-pandemic? Is it mostly just the story of there's more supply and then there's tweaks to immigration policy, or are there other factors at play?
Yeah, I think those are, ultimately the biggest driver. Like I really do believe in ultimately supply demand is going to dictate, the direction of affordability and ultimately asking rents in the market. We've seen, a little bit of loosening in terms of churn rates. So the amount of people who actually move out of rentals and, look to either, upgrade or move into the housing market. But we're also still in a period where we're seeing this incredibly low period of churn. Like historically speaking, churn in most markets still between sort of like 10 and 15%, when in the past, that was usually closer to 30% in what's like maybe a more healthy market where people can kind of just move as they desire. And so that's like a very weird thing. Like normally, if you have a 100-unit building, 30 people should move out in the year, and that's sort of natural churn. We're in a period where 10 to 15 are moving out, and with that also means, to your earlier point, that there's just less availability of inventory and choices out there at the same time, especially in older stock and more affordable apartments. Like that still remains, a really big challenge for some people.
No, that's so true. If you find an older building, I know this myself, with good square footage and 2 or 3 bedrooms, you stay in it, because where else are you going to go? There's still such a shortage. Now, that leads into my next question, because, I'm on the record saying the rental experience in Toronto particularly is pretty bad. Again, hard to find anything that's big enough space for two people working from home, let alone starting a family, poor layouts. Obviously, prices are still so disconnected from incomes. Do you think that's a fair assessment? And like, how do you think the rental experience could be improved for people?
Yeah, I think it is a somewhat fair assessment. I think, unfortunately, a lot of people view the rental experience in Canada as a whole as being pretty broken. I do have some optimism that it's healing in time. I might say. I think it is improving. I think the reason why so many people are frustrated, though, is sort of two factors. The first is that we didn't build rental product in Canada for the better part of the last 5 decades. Condo development in terms of multifamily was king. And ultimately, these condos did become a major part of the rental stock, but they were originally designed for home ownership. And then in sort of the later decades, in the last 2 decades, investors really started to seize the opportunity. And so many of these condo units, ended up in the rental stock. But these buildings and the experiences, they weren't actually designed for renters. They never were, right? And so they're ultimately not run by professional rental management companies. The laws and the regulations that govern your rights as a tenant are entirely different than when you rent from a single landlord or an investor. So I think at large, like that is one of the key factors that's driving this. The other factor, which I think has been quite damaging over a long period of time, is the implementation of some rent control policies in our major cities. What was ultimately designed to protect renters, and certainly may have helped them in the short term, paradoxically has created a very challenging long-term problem in the market. So, the first thing that unfortunately rent control has the history of doing is really sort of scaring off and driving down the supply of new rentals and driving out capital. So obviously, if you take some of the profit upside of a real estate developer by putting caps on achievable revenues, they could just go build in other markets, or they can move their capital somewhere else. Capital can be very fluid, or they'll build condos, right? Different model. You don't have to worry about it long term. So you've created an environment where supply now is ultimately not keeping up with demand. And then this is where things really could start to compound, because if you think about it, the law of economics, when demand outpaces supply, prices rise. And so you get this really odd thing that ultimately happens where there's this disparity between rents in occupied units that are rent controlled and units that become available, and that disparity starts to grow and grow. And landlords naturally realize that an unoccupied unit is worth a lot more than an occupied unit. And, name one other business where it's generally like a natural occurrence for you to want your longest term, best customers to actually leave because you will make more money. There aren't many businesses, there's not many verticals where that's the case. And so you actually have a weird sort of scenario that emerges where, as a business owner, as a landlord, delivering a subpar experience to their customer is, actually better off for them. So the incentive to adopt new technologies, why would you improve buildings? Why fix things quickly for residents? Why hold residence events? Like, these aren't things that ultimately you're incentivized to do. And that's so different than any other business vertical, like on earth. It really is, right?
Yeah.
It's completely counterintuitive. It's unfortunately one of the negative externalities of rent control, and it really compounds over decades. Like, I think our generation now is who's really feeling that, especially new renters who aren't living in rent controlled units and getting the upside, the benefit of having those incredibly low rents that are still in place.
Speaking of apartment buildings, which is what most people call purpose-built rentals, and so many have been built over the last little while and more coming online. Like, why should renters care whether they're living in a purpose-built rental versus someone's investment condo? Myself, I've only ever lived and rented in condos, actually. What's the actual difference in day-to-day life?
Well, I think especially if you're looking for a unit in the downtown core, and that's sort of highly amenitized and gives you sort of that lifestyle renting. Up until recently, like, your only choice was condo, right? But I also
Yeah.
think one of the challenges that we experience as like a generation is that because purpose built rentals weren't built for like 50 years. The average consumer, the average Canadian, doesn't actually know, and I don't blame them, what the difference between a condo and a purpose-built rental is. I mean, to them, from the exterior, they look the same. They're like a high-rise
Yeah,
building.
just a different landlord, right? So
Exactly. So, like most of my friends, if you're just walking down the street with them, and they'll just kind of, oh, look at that condo, right? They don't even know
yeah.
that it's a rental, or vice versa, right? So, I think that sort of speaks to, if you don't even know the difference between those two, it's hard to expect people to understand the nuances and the difference from a legal perspective and your rights. And to your point, there are some major differences. The security of your tenancy is far greater in a purpose built rental. There is no ability for a purpose built rental um, owner or management company to rent evict you. Say, hey, look, we're repossessing the unit to make improvements. There's no ability for them to take it over for personal use, which is something that we really saw during that run up of rents, especially in Toronto and Vancouver, where a lot of condo owners were telling their residents, hey, look, my nephew's moving in.
Yeah.
And so I need the unit back. And maybe the nephew would move in for a month, and then they'd get the unit back on the market for 20% more, right? So those sorts of rights are there. And I think outside of the rights, I think there is also just the professional management aspect of it, the communication. Most of the newer purpose-built rental developments have some really great tech to help the resident experience, tech that's built for renters. Sometimes our tech, but yeah, it's a totally different experience, and it's treated truly like a community, and a customer service experience is at the forefront of it, which aligns it with other verticals, and other businesses.
hmm Now, a lot of housing advocates love the idea of rent control, and some even want vacancy control, which means landlords can't jack up rents between tenants. And you've already said you think this is a really terrible idea, but can you elaborate a bit more on why that is? Especially when, I've had friends that their rents can be jacked up 20, 50% year after year if they're not in one of those rent controlled units.
Yeah, I mean, it's totally understandable, and it's also understandable why renters can be supportive of those policies, because yeah, you're looking for security, and you don't want your rent to go up, right? So in the short term and at the micro level, it's a very appealing policy, and that's why you ultimately end up seeing a lot of capitulation by policymakers to ultimately move towards those policies or support those policies. And we still see, even though there's been so many studies, and economists generally always agree that rent control is long-term pain. We still see, it's like science, right? But we just ignore the science, and we still see municipalities and provinces that across North America that look to adopt stricter rent controls. I mean, we're seeing it even in New York City with Mamdani running and talking about total rent freezes, right? So it's always popular if you want to win votes, right? But the negative externalities are the driving away of capital, and in my opinion, the natural wedge that will be created in time between the landlord and the customer, the tenant, which is that it creates this sort of perverse incentive away from supporting the customer and giving them a great experience and hoping that they stay a long time. right down to the fact that even if you're picking a resident, you're thinking about a resident who is going to fit the mold that's going to allow you to potentially, have another vacancy or availability
That's
in
interesting.
a few months. And so I think like the negative externalities over time just do not outweigh the short-term gain. The problem is a political cycle is 4 years, right? so you're trying to win an election, and it's pretty popular, and I think that's where we really see, unfortunately, the challenge here. And with many issues, like we have to solve most issues over the period of 15, 20 years, not 4 years. And then when you put these policies in a place, they're incredibly unpopular to take away. Like you can't, right? So it just compounds and compounds and compounds. Luckily, new purpose-built rentals, for the most part in most provinces, they aren't subject to rent control for usually at least a period of time. I think in Ontario, it's 20 years. If that weren't the case, there wouldn't be a single building being built across Ontario or any other provinces with rent control.
Now, I've heard you don't like the term financialization when it comes to the housing market, and my co-host Mike also hates the term. Can you tell me why you find it so problematic?
Yeah, look, I mean, I think again, as a generalization, there are always a small minority of bad actors out there, but the vast majority, the term financialization, in my opinion, sort of demonizes the very firms, the very companies, and the organizations that are ultimately going to help us fix the affordability crisis on housing in Canada. I think that unfortunately, the reality, in my opinion at least, is financialization is just like a synonym of capitalism. Uh, and if we believe in capitalism, I think it's very challenging to single out a specific industry and say, well, this industry doesn't deserve capitalism. And like we're not living. I think we all agree we're not living in Soviet Russia, and so industries should be allowed to financialize. If you don't let them financialize, capital generally flows to other industries, other sectors, other countries. So on a societal level, I don't believe there's any other industry like housing where so much of the narrative, deeply and actively roots against the development of an industry. In many cases, these are some of the best employers and best firms that Canada has to offer. They certainly don't get the Canadian public rooting for them or the red carpet rolled out like we do for other sectors. Like take the auto sector, where we do anything to protect these guys. The tech sector, like we idolize companies in the tech sector, like Rentals.ca, of course, right? But or like big companies in the tech sector, like that are Canadian giants, like Shopify, or in the retail sector, like Lululemon, right? And at the end of the day, they're just financializing, like Shopify is financializing e-commerce checkout engines and websites, and Lululemon is financializing yoga pants, right? But like at the end of the day, there's just so much misplaced anger that comes back to the fact that I think our many levels of government have created huge issues for the market and housing, ultimately disrupting the delivery of this good customer experience, and it's tainted the whole industry. And so I get it. Renters, tenant advocacy groups, and politicians like kind of dive into that. I think the anger is very misplaced towards the industry itself. They're really the only ones who have the scale and the ability to help dig us out of this affordability crisis. And I think we really need to do a better job changing the narrative towards the industry.
Speaking of public anger and demonization in the media, a big group that gets that are REITs. And we did an entire episode trying to explain them, and we'll link to that in the show notes. Why do you think the perception of them is so bad with the general public?
Maybe because they've been branded with a 4-letter acronym. I don't know, REIT. It's easy to
They need to
remember.
rebrand.
Yeah, exactly. I mean, at the end of the day, a REIT is just a fund for rental housing. There's private REITs, there's public REITs, and there's many ownership structures that are outside of REITs and are sometimes just as big, right, under one brand or one landlord. And so really, to me, it's like, it isn't just REITs, it's sort of the entire professional rental housing industry. And I do think it comes down to, like, again, like there is this non-natural, in my opinion, wedge that has been sadly driven between the customer, the renter, and the rental housing provider. And it's unlike and has many more sensitivities than other industries. Like, there's just not this sort of hate on for the auto sector by car drivers, right? And of course, maybe that boils down to Maslow's hierarchy of needs. At the end of the day, housing and shelter is like the most important structure in your life, right? And so that's where I think the sensitivities are certainly heightened. But again, I think it is misplaced because when we talk about scale and we talk about capital and moving fast at trying to fix this issue, there's the government who could maybe help fix it and build 4,000 homes in the next 7 years, which is a spit in the ocean. And then there's the capital and there's the businesses that have been doing this for decades and can scale. And by the way, these publicly traded REITs, many people own them in their mutual funds, and many people are employed by them. And it's a huge part of our economy. The construction sector is huge. Like, these are the guys who can get us out of it. And so unfortunately, it's just this like us versus them narrative. I'm not either. So I'm not us versus them, but that's what I observe.
Well, Max, I suspect a lot of our audience is already familiar with Rentals.ca, but they might not know how much else you do. Can you tell us a bit more about your company and how you got it started?
Yeah, for sure. And for those who don't know, Rentals.ca is the largest marketplace in Canada to find a rental home if you're a renter, and if you're a landlord, to list your rental property. So truly a marketplace. We sit in between both sides. The parent company, RentSync, we have a couple of different software solutions and data solutions for the rental housing industry, mainly on rental housing providers. So all the way from marketing software that helps landlords and property management companies get their units out into the market and list their units, right through to leasing software that helps them sign online leases with prospective tenants and do credit checks and all that sort of stuff, all the way through the rental application phase to leasing, through to resident management software, where as a tenant, you have a resident app. You can communicate with your renter, pay your rent, do maintenance requests online. And then we also have a whole data portion of our business as well, with a partnership with Urban Nation, where we provide data back to the rental housing industry and real estate developers.
So you're very busy, which is why I really appreciate you joining us today. Thank you so much for coming on. And thank you everyone to listening. If you want to torture yourself by looking at current rent prices, check out Rentals.ca and their monthly rent reports. Also, thanks to our producer, Meredith Martin. And if you have any thoughts about rental horror stories or questions about the rental market, send us an email at missingmiddlepodcast@gmail.com. We'll see you next time.